Oh man, guys, holy crap. Let me make sure I'm good, right? My shirt's all right. My hair is looking good. I wiped off all my sweat from earlier today because the session today was awful. The stock market completely crashed. We had the S&P down 2%, the Dow went down 1%, and the NASDAQ and the Russell, each of these, get ready for this, guys, each of these went down over 3%. So we got to break down the Fed today, stocks, charts, my thoughts on the markets. So sit back, relax, hit the like button, subscribe, join my Patreon down below if you guys want all my buys, sells, call outs, morning update videos, plus more. Now's the best time to sign up early in the month so you can try it out. So check it out. Link down below. Make sure to also get your 2 stocks from Webull and your $50 from M1 Finance to make back some money that you lost today. And let me tell you, I lost some money today, and we got to talk about it. So SPY went down to the 180 moving average. It closed right above the 180 moving average on this 4-hour chart here. And quite frankly, guys, this is a healthy pullback. Let's get that straight away here, right off the bat. Let's say that to start off this video, this was a healthy pullback. Look, SPY went from, what was it, 450 on the 20th of December, and it went all the way to 480. So we rallied in just 2 weeks, guys. We rallied $30 on SPY. We're talking close to 6%, roughly 6%. Oh, actually over 6%. So the fact that we're giving back some of that gain is not the end of the world, and the uptrend overall is holding. We're right above, again, like I said, the 180 moving average on this 4-hour chart, which, mind you, has held over the past couple of months. Very obvious. You guys can see that clearly. And we had the VIX, the mighty old VIX, the volatility index, the fear index, up over 16. Let me say that again, guys. 16% just today. And when it comes to triple Q, let's break down all these charts. We'll look at the Russell and the Dow as well. Triple Q clearly collapsed under not only 395, 390 as well. And I told you guys, if 390 breaks, I actually made a post about this on Patreon today. I said, look, if 390 breaks, this thing's probably going to fill the gap to 380. Did I think it was going to happen in one day? No, but hey, that's what happened. We broke 390. We got all the way down to 384, and this looks like a textbook falling knife. And let's take a look at the Russell, because this got hit the most today, down 3.3%. Russell is now looking like it is trading back towards the bottom of this horizontal channel that we were in for pretty much all of 2021. If you guys take a look here, Russell, the Russell was between 2150 and about 2370. We did break out of it momentarily. It was a fake out, a bull trap here. We got to about 2450, and now we're clearly taking a huge haircut under 2350, and now we're obviously under 2200, heading towards the bottom of the channel. And for the Dow Jones, let's see what the Dow Jones is doing. This looks pretty good. Out of all the charts, the Dow looks the best right now. The Dow stocks didn't do that bad today. In fact, they held up pretty decently. And we just hit an all-time high this morning on the Dow, believe it or not, just a little bit under 37,000 points. And this probably will see a little bit more red in the short term, maybe down to the moving averages, whether it be 35,800, maybe 35,500, 36,000. You know, that is where the Dow in the short term could end up going. So I don't think this is a full-on crash quite yet, even though today, the market today was a crashing market. But I don't think we're going to just go down 10-20% now. The market is screwed. I'm not necessarily saying that, but there are going to be some troubles in the short term based on what we got from the Fed minutes. So today, and we're going to talk a little bit about this, guys, so make sure you stick on throughout, hit the like button, subscribe, do all that good stuff. So let me read some notes from the Fed minutes today, and this is a quote here. Participants generally noted that given their individual outlooks for the economy, and by participants, I believe FOMC participants, given their individual outlooks for the economy, the labor market, and inflation, it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated. So Fed the Fed funds rate might be going up sooner than anticipated, guys. And some participants also noted that it could be appropriate to begin to reduce the size of the Fed's balance sheet relatively soon after beginning to raise the federal funds rate. And this was all said in the minutes that were released today on Wednesday. And the language showed the depth of the consensus that has emerged at the Fed in recent weeks over the need to move against high inflation, which we've been saying on this channel for quite some time. Inflation is high, it's running rampant, and it's obvious. We've been saying this even when the Fed was trying to say, oh, come on, guys, there's no inflation, it's transitory, it's going to be okay. I've been saying that's BS for months at this point, a long time. Let's just put it that way. And again, now they're looking to, hike the rate sooner, taper faster. This is not too, it's not too surprising, at least to me, guys. And if you guys have been watching my videos, you probably aren't that surprised either, quite frankly. And the Fed has about an $8.8 trillion. They have $8.8 trillion on their balance sheet, which is insane. That's a lot of money on the balance sheet, right, guys? And it's ballooned up over the past 2 years here. And participants pointed to a number of signs that the U.S. labor market was very tight, including near record rates of quits and job vacancies, as well as a notable pickup in wage growth, the minutes said, with many participants judging that if the current pace of improvement continued, labor markets would fast approach maximum employment, which you guys know with the Federal Reserve, if their goal is maximum employment, if they get there sooner rather than later, which now, they're getting a maximum employment here in the United States, right? They're going to be tapering. They're going to be looking to raise those rates because that is a catalyst for them to do that, right? We're seeing that. We've seen that in many of the press conferences. Jerome Powell's like, oh, our main goal is to always reach maximum employment. He says that before, tapering and, raising the rates and so forth. So this is a pretty hawkish Fed, not dovish. They're looking pretty hawkish today, guys, and the stock market didn't like it. And we'll see if this occurs or if it's going to be like this for a couple of weeks, or is this just a short-term dip before we end up rallying again and we see buyers stepping in. So I'm going to be looking at the 180 SMA here on SPY at about 465, 470. Excuse me, guys. If buyers step in there, maybe we do get a bounce back rally, If Triple Q sees buyers at about 480, 485, we might get that bounce back rally. And mind you, we're pretty oversold on Triple Q and SPY right now. Dow Jones, not so much. And the Russell, we're pretty oversold on that one as well. So maybe we do get a bit of a relief rally, but overall, expect volatility either way. Whether we get a rally, we sell off more, we're going to be choppy. The VIX is back over, or it's right almost above 20 again with today's 16% green day for the VIX. So what do you guys think? Be ready for anything here. What do you guys think? Let me know your thoughts down below. And again, make sure to hit the like button. And now let's talk about some stocks, because even though despite the fact that we had an awful day in the markets, pretty much all of us, unless we shorted the markets, which I didn't do, so pretty much all of us out there that didn't short the markets today, we got clobbered. Despite that, there were some stocks that did pretty well today, surprisingly. We had Merck, MRK. Let's pop that chart up. This stock went up 2.5% today, and by the looks of it, it's breaking out. Look at this, guys. It's breaking out of both moving averages. We're noticing potential golden cross on the horizon here. And if you guys remember, this stock was $92 per share. This was back in the beginning of November. So it's actually taken a bit of a haircut from $92 all the way to $72. It dropped over 20%. 20%. Got into a quick bear market. And now it's breaking out. So at this point in time, in the middle of a red market, this showing strength, that's a very good sign. So I'm looking at Merck to see if it continues this momentum. And the fact that we broke out of $78 is a good sign. Now I'm going to set my alert at $80 because if that clears, that is going to be a big breakout zone for this momentum, in my opinion at least, to continue. And from there, 80, we're probably going to go 85. That's the next big gap. And then maybe back to 90. We'll see how it ends up playing out. So Merck looks good. Pfizer is another one that did well today. PFE, this one up 2%. The chart looks pretty good. This, like Merck, also took a haircut from $61 to about $54. So it sold off about 12%. Not as much as Merck, but still 12%. That's correction territory, right? And as of now, it is holding the 180 moving average, which we got to watch over the next couple of days whether or not we continue to hold the 180 moving average. And today, B of A Securities upgraded Pfizer to a buy from neutral and they adjusted their price target for Pfizer to $70 from $59. So that is why we did see that nice pop today, 2% green day. So let's see if it continues. That's what I'm looking for when it comes to Pfizer. And let's take a look at some big tech names, because today we had the NASDAQ down over 3%, like I mentioned earlier in this video. Big tech did not do well. I'm talking, it was a bad day. Apple, AAPL, went down 2.6%, down about $5, which isn't as bad as the next one we're going to talk about. So I'm looking at Apple here as we are selling off about $8-9 off the all-time highs. And to be honest, this might be a buy zone for Apple. I'm not jumping the gun yet. I'm not loading the boat or anything like that, guys. And full disclosure, I already own Apple as a long-term investment. So I'm not, and at much lower prices, by the way. So I'm not jumping at this little dip to buy more Apple. But if it starts getting down towards that 180 moving average, which, mind you, has held as support for months, this gold moving average here, we might see buyers step in, and it might open up as a pretty nice swing trade. So be patient. Apple's earnings are coming up later this month. We are getting close to earnings season again, guys. So we might be getting some bullish momentum here. Time will tell, and we really have to be patient. We can't just go, well, I guess we can. I can't tell you guys what to do. But I'm talking for myself here. I'm just going to be patient. I'm not looking to jump the gun on anything. But what I might be close to jumping the gun on here if it comes down a little bit more, is Google. Guys, look, Google went down almost 5% today. And Google, if you guys are new to my channel, you probably don't know this, but for my longtime viewers, Google is my favorite stock of all time. If I had to pick one investment for the next 5-10 years, no doubt in my mind, excluding S&P 500 ETFs, of course, if I had to pick an individual stock, Google all day. That's my pick. It's my biggest long-term position, and now it went down 5%, and it's down from $3,000 a share now to about $2,750. It's down about 10%. I'm getting interested to maybe add a little bit more. And my average cost, full disclosure, is right around $2,000, maybe a little bit under $2,000. So like Apple, my average is a lot lower than where we are now. So I'm not looking to just jump the gun and buy a lot more of these stocks. But if they start coming down, let's say, for example, Google comes down 2,500, I'm going to be buying more Google, no doubt, at 2,500. Heck, even 2,600, guys, I'm going to be buying Google. I love this stock. So, yeah, Google, look at this weakness, guys, even as a short-term bounce-back trade. I don't want to say with 100% certainty, because nothing's 100% certain, but I am confident, let's put it that way. I'm confident that Google will see a relief rally. We'll probably get back over 2850, maybe 2900 again in the short term. That could be a nice little swing trade. Just saying, guys. Keep that in mind. And the next stock is eBay. Ticker symbol EBAY. This one, I got a comment about it. Talk about eBay stocks. Here we go. We're talking about eBay. This stock went down today, down about 1%. Not too bad considering a lot of stocks got destroyed today. And eBay, it's the chart's not looking spectacular. I mean, it's don't get me wrong. Yes, it is holding an uptrending channel on the yearly chart. You guys can see it. We're more towards the bottom of this channel. Well, we are at the bottom of the channel. But the thing is, we're trading under the moving averages, and we're not really seeing a confirmation of a breakout yet or buyers stepping in. We did see buyers step in about 2-3 weeks ago, more like 2 weeks ago, but that ended up being a bull trap. You guys can see it went from 63 to about 67. We thought we were breaking out, but then we got rejected by the 180 SMA, sold off, and it ended up being a bull trap, like I said. So I'm going to put my alert at $70 per share on eBay, and this one it's going to require patience, no doubt about it. And I'm going to need to see a break out of $70 for me personally to even consider trading eBay. So yeah, guys, put your alerts for me again, $70. We're going to be watching it closely at that point. So the next one here is Under Armour, ticker symbol UA. This one's very similar to eBay. It's towards the bottom of the channel, which is why I'm watching it. It's piquing my interest because if you guys recall, if you watched my video from 2-3 months ago, which you guys probably, some of you did, we actually called Under Armour before this massive run-up. It was $17 and it went all the way to 23. It was at the bottom of the channel and it went all the way to the top of the channel. Now we're back at the bottom of the channel, so I'm watching it again. And this kind of had similar price action to eBay where we got that relief rally and it ended up being a bull trap. You guys can see we went from $17 to about $18.70, and now we're back down to the mid-17s. Today alone, we went down about 4%. So that ended up being a bull trap, but it doesn't mean that the stock's going to the gutter now. We can still watch it, as now it's getting pretty oversold again. And we did get a little volume spike today. So I'm watching out for Under Armour. I'm going to set my alert. I'll probably put my alert at 1850 for this one. Let's do that together. Mark is at or above 1850. There we go. And the last one today, guys, which has been a darling in my portfolio, let me tell you. And it was pretty much my only green stock today. Actually, no. Look at this. This is actually crazy. The two stocks that were green on my watch list today, I own both of them. So it wasn't that bad of a day. Oh, I mean, don't get me wrong. Overall, I was still red today, but these weathered the storm. Intel, which we're going to talk about right now, and we had Alibaba too go up today. Alibaba went up about 1.3%. I think we got some news that Charlie Munger maybe tripled up his position or doubled up his position on Alibaba, something like that. And full disclosure, you guys, my Patreon know I own Alibaba, and of course I own Intel. And I was looking at Intel earlier today. I was thinking, I was like, should I sell some short-term shares here? Should I just lock in a little profit? Because this is one that I've been buying for a couple months. I have some long-term shares, and I have some shares in a shorter-term account. And I've been thinking, this thing I bought at around 54, 55 originally. It sold off. I added a lot at about 50, 51. Now my average has come down a bit. I was thinking, should I sell some shares? I didn't sell shares. I ended up not selling any. But look, either way, this did very well for me. I was thinking about locking profits, didn't do it. But overall, it did well. It went up 1.3% on the day. You guys can see we filled the gap pretty much all the way to 55, 56 today. And this level needs to break. I'm going to put my alert at $56 because if that point breaks, which I do believe in due time, it will, Intel's probably going to start going bananas. And we got an alert, or not an alert, but a price increase today from Northland Capital. They upgraded Intel to an outperform rating from a market perform with a $62 price target. So that ended up moving the stock up, and I'm bullish on it. I'm long. I have long-term shares, which I'm not selling anytime soon. And again, I have some short-term shares that I almost sold some today. But I didn't do it. So, guys, the markets are wild. The markets are wild, and I'm going to make a video probably tomorrow. It might come out. I don't know. I'm still trying to plan it out, but I'm going to make a video that is going to go over, it's going to detail how to prepare to, not for necessarily, I'm going to title it how to prepare for a crash, but I just want to go over how you guys can weather the storm when we're seeing crazy markets like these. And I think it's a good way to kick off 2022, making that video along with my stock market for beginners video, long video, 2.5 hours long. And if you guys watch that, I'm sure you guys found some value. If you didn't watch it, come on, you guys got to go watch that video. I'll pop it up at the end of the video, this video. So yeah, be on the lookout for that. I'm gonna drop it tomorrow. Hope you guys weathered the storm somewhat today. It was pretty crazy out there. If you guys found value in this video, hit the like button, subscribe. what's the next thing in the order here? Like button, subscribe. Oh, drop me a comment. That's what it was. I'm forgetting, guys. These red days have me cloudy sometimes. So do that. Check my Patreon out if you guys want all my buy, sells, call outs, morning update videos, plus more. That's linked down below. Make sure to also get your 2 stocks from Webull and your $50 from M1 Finance. You guessed it. They're also linked down below. And with that being said, strap up your seatbelts, guys, because we're on a roller coaster ride again. I'll catch you guys in the next video. Thanks for watching, as always. Keep crushing the markets. Peace out.